Good morning, traders. Welcome to the 4th of September. US and Canada are off today, so we should have a relatively quiet session. So let's run over to what we heard over the weekend, which isn't much either. And then we'll have a look at what's going to happen more this week. So first of all, let's, as the tradition goes, move over to what's happening in China. And there's a couple of things which show that China wants to remedy to their problems. The investors are not really completely on board with everything yet, but still, China is to establish a department for developing the private economy and also accelerate market openings and to show that they have launched a massive amount of ETFs over the weekend. Let's see how those develop. But anyway, China is trying to revamp their economy. That is clear. Remains to be seen whether the market is going to buy it. They did fix the Chinese yuan again low in the 717s, I think 717.88 or so. So they're still showing that they want to keep this Chinese yuan in check. In the meantime, as well, Country Garden, the developer, has had the approval to delay their bond payments. So the Chinese state is really getting very involved in everything, and they are going to try to resolve a couple of things. In the meantime, the U.S. Commerce Secretary Raimondo was in China as well. Her last statement, even though she said that the progress had been made, was to tell the Chinese that officials that the U.S. patience is wearing thin. U.S. companies need a clear and level playing field, and on the ground it is not so at all, she said. So there's still some warnings from the U.S. towards China regarding to trade, regarding to investments in China and mutual investments. So the U.S. are still clearly not very happy with the current situation, and that's probably going to keep those investors in China on their toes right now. What else did we see? Quickly moving over to, no, we're staying in Asia for just one more minute. The ASEAN, so the Association of Southeast Asian Nations, is the summit is ongoing right now. We haven't heard any real headlines, market-moving headlines out of there, but it's clear that the CEO of Temasek, for instance, said that they should get their act together and work much more closely. They don't feel that the ASEAN organization is really tight for the time being, and they are not very happy about the situation. They're fearing that they may lose even more control of the economies over there. Then we are moving on to the ECB. Wunsch was out with a line over the weekend that although the situation has been evolving on inflation and on the economy, they may need to do, in his words, a bit more to the rates at the ECB. So he's still in the relatively hawk camp. Elsewhere, we have seen also that oil has been pushing through, and we had some stats coming out that 4 weeks in a row the SPR has been growing. So that's likely not a stranger to all these oil moves that we have seen over the past weeks, pushing higher. So we have to keep an eye on what the SPR folks are doing. Instead of buying it in the 60s, they seem to be happy to buy it in the 80s. So another good handling of finances. What else? I think that's in the headlines. That's about it really for this week. We are going to get the G20 summit in India this week, but Xi has already said that he will not attend. As we know, Putin is not going to attend either, and that comes on the back of those tensions that we saw during the BRICS meetings a while ago between India and China. And that likely has to do with that. Also, geopolitics are still going on, the issues between China, the States, Taiwan, even now Malaysia and things. And I think the Xi may make a statement there by saying he's not going to the G20, just by making it clear which side he's on. Others, and that's wild speculation, have been saying that he has perhaps a little bit of light health issues, but I think it's more a case of making it politically correct if that were to become an official line. And it's rather due to current tensions, that he's not going to attend the G20 summit. His Premier Li will attend, and I think Russia will send Lavrov also. That's it. Basically, we can go straight into what's happened on Friday. And what's happened on Friday, of course, the main event was the US jobs report. We had a bit of a beat on the non-farm payrolls, but straight away we have to note that the revisions were lower, and these revisions have been lower by about 110,000 over the past 3 months. That comes a bit in line with those revisions that we had last month. The quarter or half-year revisions were also a bit lower. So we have to take these numbers with a pinch of salt. We also saw the unemployment rate tick up, the U6 unemployment rate alarmingly back above 7, alarming for some, of course, those directly involved. But the rise in unemployment rate here can be explained by the participation rate going up. That is a technical factor or a technical push to the unemployment rate, as we've already been discussing in prior meetings or prior shows, that if your participation goes up, that means more people getting into the jobs market, and also more people getting onto the unemployment list. So that's a bit of a normal factor. All in all, so we've seen the hourlies just a tad lower, but nothing alarming there. But if you look at it, the report as a whole, that is a perfect report for the Fed. I think the Fed will be very happy to see this, very happy to see the participation rate go higher. This is what they have been expecting for a long while. At the same time, the jobs creation is still there, give and take the revisions. So this is really a very, very good report for the Fed. So that has pushed the expectations for a Fed move to virtually zero. And now the expectations are really for overwhelming standstill and monitoring of the rest of the data again. So it is a soft landing number. It is a Goldilocks number, if we can express it like that as well. So for the risk side of things, this looks like a pretty decent report again. So initially, the dollar got sold off a little bit and then came roaring back because I think of the headlines and because of the participation rate going higher. So even if we're still in those ranges and in channels, I think it's quite potentially at least significant that the dollar managed to behave well, that risk managed to behave well. Because as we know, we've been talking about those seasonals in September, where September mostly sees the equity markets going down, the dollar rally. But could it be that this September will be a little bit different, and having like the equity markets hold up because of the Goldilocks and because of the soft landing scenario, all the while the dollar remaining beat. So I am smalls leaning towards that scenario right now, but we'll take a look on the moves and the charts in a little bit. So yeah, in conclusion, that's been a very good report. We know that the FOMC, the Fed, Powell are looking at the potential of this unemployment rate going to 4 and above 4%. And we'll see on the yields what happened there, because that's been a little bit significant. I think this number, first of all, put pressure on those yields, but then these numbers have, in a second wave, seen the dollar and the yields recover. Elsewhere in Canada, we had a bit of a sluggish GDP there, coming in at 0. The prior one also revised a little lower. So in Canada, the situation is not as rosy as it may be at its neighbor, the US, where we saw numbers above 2%, right? Remember last week. So there, Canada remaining on its toes. We've also then seen the last of the PMIs coming out, with the ISM as the main one, and it was albeit below 50, but we know that most of the PMIs now are trading below 50. Perhaps not so much in the UK yet, but the European ones. We've seen the Canadian one here as well. We know the Australian, etc. They're all below 50 now. This is a pretty decent number. Okay, it's not great on the prices, and we saw a bit of an uptick, and I think that as well has been driving the yields later in the Friday afternoon. But the employment ticks up again, which is not too bad. The new orders, okay, half. But then the construction spending was adding a little bit to it, and that printed a slightly better number as well. Still no big alarm there, even though, I repeat, we are below 50, but we know that the manufacturing sector everywhere in the world is a little bit under the cush. Right, that is most of it for the Friday. We had a bit of Kiwi numbers out, terms of trade slightly better, albeit still in a negative for the prices, but the terms of trade themselves crept out of the negative zone and are trading in positive again. Then we had the Aussie inflation, George, that is coming down. Business inventories are coming down as well. But the alarming little bit in here was the company operating profits in Australia, and that is not a great number. It's a secondary number. I wouldn't bet my book or my portfolio on it, but we need to keep that in mind, because it's going to be linked to what's happening in China as well. Okay, and then in the morning, we had the German trade balance positive. We actually crept back into positive on the imports, but the exports, albeit less negative than expected, they are still in negative territory. So the euro had some sort of relief, but I think it's more to do with positioning this morning. Had some sort of relief, but we are hanging pretty low still on the euro. And then later in the day, in our morning, we had this Centix investor confidence confirming this negative sentiment, especially for what's happening in Germany. So the Centix CEO came out and said that it's mainly Germany weighing on this Eurozone investor confidence index. All right. We are through it. So what's to expect next? So today, US and Canada are closed. We do have Lagarde speaking this afternoon. We do have Lane and Panetta speaking later. They are at a conference somewhere. I forgot where. I don't think we have to expect too much, but in a market where the US is closed, we may face a bit less liquidity in the market. So any well or misplaced word by Lagarde may see the market move a little bit in the euro. So keep an eye on what she's going to say. She is speaking at a seminar organized by the European Economics and Financial Center. So yeah, anything can be really expected there. Philip Lane is going to speak at a panel about independence, accountability, and proportionality in the context of ESCB secondary mandate. Well, I think moving on there. And Panetta is going to talk on the digital euro. I don't think that the FX market is really going to be very nervous about that one. So that's it. The rest of the week we'll see more data coming out, but the start of the week is relatively quiet. Tomorrow it's again PMI day, services, and we have the RBA. The RBA is widely expected to keep the interest rates unchanged, right? But the thing is still like is the glass half full, half empty over there. So the most important will be to see what they say. We have seen the inflation George come down, the latest number, so that should keep them firmly into the unchanged territory, which is the base case. But it's Lowe's last meeting. Is he going to go out with a bang? Is he going to go out in silence? We don't know. So we have to see what the statement is going to tell us, right? So that's the next one that could be a market mover. Right. And I think we've gone through whatever needs to go there. Roberto, I'm just going straight into the Q&A with Roberto. Why is Canadian not following the oil prices? I think it has to do with the data. We've seen those this weaker Canadian GDP print as well, and also technically the dollar CAD stayed above roughly give and take 134.90 figure. And technically the dollar CAD is still pretty much oriented to the top side, together with the dollar, the wider dollar. Okay, and I think a lot of that has to do with it. Is those data being a bit sluggish of late. All right, and that's the reason why it's not following oil right now, and also the reasons for oil, if it's really like the SPR replenishing the reserves, if that's your main driver, it's not really anything economic that will be driving the price of oil, right? So that is also in that case there is little reason for the currencies that are oil driven to really follow very closely. Okay, so we've seen here this dollar CAD on Friday. We tried below 135 and it's holding. It's really starting to hold very well in that 135. It's going to be a very important level to watch. Okay, Roberto, and I think if Canadian dollar has to start following oil again, we need to break this zone here. Otherwise, the risk is that we are going for a revisit of those prior highs here, the 136.40 zone, a little overshoot here to 136.60s. Watch this area. You see, we have printed a few spikes here, a few lows here. That's your next zone to monitor on the. Oh, am I not sharing the charts yet? Sorry, guys. Whoopa. Thanks, Brent. Yeah, so just to repeat, this dollar CAD holding here in the 135 zone, Roberto and everybody. And now we have to monitor what's happening here. We had a lot of traffic here in this 136.40, 136.60 zone. Okay, this is your next traffic zone right here. This one is the one that you going to have to monitor. Okay, put it a little bit tighter. This one here, there. Okay, this is your zone here. One, yeah, I should put it a little lower. Why am I not? Ah, here we go. Okay, here we are. So this is the zone to monitor. Okay, if that would ever give way, then there's a really a possibility to push in into the 137s, 137, 15, 20-ish. That's a possibility. Therefore, this 135 now has to hold. Give and take 10 points as usual. Over to what's happening in Euroland. So we had this this retest, and I'm going to just for once look at a tighter one just to show the action on the NFP. I spoke on Friday. I said your first zone to watch is 107.70s, 108.80, and as per miracle, the top is 81 and the low is 72. So I wasn't too bad with my expectations on Friday. For that being an expected range, it was also I did also warn that the FX option market was not expecting too much. So, and that's exactly what we got. We have this 108.30, bit of a pivot level around which the market is turning around, and we are continuing this this scenario right now. So we bounced off the prior low, which is also a bit of a fib level here. So this zone is holding now. We are in a bit of a wait and see pattern at the start of the week. I am relatively bearish or negatively biased towards the euro just because of weakening data in the eurozone, and I don't really like the data too much. So seeing a reaction as well on Friday. We are a bit in the middle of the park right now, but I would not be surprised that if we don't get any bigger accidents on US data, that we are going to test this 107.25.30, possibly this week. If we get back above 108.80, I think then we are going to go back to the 109.40s here. So it's a very, how should I say, the percentage wise, it's not like I'm 100% bearish euro at all. I'm more like a 60-40, 70-30 for the downside, and I won't be a hero if this 108.80 goes and holds. Then I'm really going to step out of it. We could just be in a very slow move and actually range bound here as well, and the euro crosses may do the heavy lifting rather than euro dollar again. Sterling did hold pretty well. So we had this this little one here. We did get the same move. We had a little spike after the data in cable, and then we came down here. But look at this little trend line here, which comes in around 125.80. That's held. So I think we are probably, what am I doing here? We are probably trading inside of a bit of a triangle right now on the cable with 127.25 on the top side, 125.80 on the underside. This channel is likely going to be going into the bin because we came out of it pretty much horizontally if you look at the wider moves. And I think we are in a period. I'm same oriented as on the euro. I think the dollar is doing pretty okay. I don't have much in the sterling because I don't know about the underlying strength. You know, I've been very positive on sterling for a while, but then changed my bias about a week and a half ago, and I'm still in that same feeling. Is that I'm relatively neutral on what's going on in sterling right now. Euro sterling could slowly drift lower again if the euro is weak enough. And we've held this tryout above 86. We are now back on some intermediate support in the 85.40 area. I would not be surprised if either it dies out here for a while, or if we start to move lower again here. And that will depend then on the data that are going to come out tomorrow, the services and the composite PMIs tomorrow. Okay, those could be the movers. I'm not sure if today we are going to see any big moves there. Yen, we've seen. I was talking about 145, and I said like get a close above or below is going to be important. Well, it's clearly above. We had a retest of that prior low here. On the wave of the first NFP moves, or where the dollar got hit just a little bit. We had these breaks up 145, but it was really fast to break back above again. And since then, this looking very impulsive. And then we come back to what I've been saying before, is that if you listen to the Japanese officials, they are not in a hurry to do much. They seem to be pushing us back even into next year for further developments on the rate side. We have to take into account, or the next big Bank of Japan meeting, there can be some speculation again about what can possibly be or not. But we've already seen after the last BOJ meeting what kind of moves we can have when the market is getting only a quarter or a fifth of what they want to see. Then the market reverses pretty steeply. And that, I think, is a possibility of what may happen as well. In the meantime, short-term trend line broken to the top side. I think this is relatively positive. I think that barring accidents on the US side, we are going to possibly start building a bit of a base here in those mid 145s. 145 is still going to be your major point of measurement. Close above or below is still going to be important on daily closes, right? But this looks like it's getting positively oriented again, and we have to look at what happened for that. We have to look at what happened over the PMIs over the jobs report on this 10-year dollar, which is still the main driver of your dollar yen. Okay, I highlighted this 408, 409 zone a couple of times. If we get below, it is possible that we're going to see a move down closer to 4% or below 4%. We had a little bit of a move, like everything moved together again on Friday. We had a little bit of a move, but as soon as we started to go back above on Friday, the dollar reversed. All right, and this is really when you really have to look at what's happening in yields, especially on the dollar yen. Is the same in everything, but especially on the dollar yen. This is still very much driven by yields and by expectations. And we've also heard from the Japanese government that they are possibly going to look at an extra stimulus plan. And who says stimulus says watering down of public finances, and that's usually not a great thing for the currency either. And it looks like as long as we are above this 145.5, I think it's possible to go for a retest of 147s. And why not, push back up higher a little bit. It's going to be the dollar side of things that is going to decide upon this one, okay? But I'm relatively positive on the dollar yen. Quick look at what's happening in the rest of the currencies. We have RBA out, okay? And we are flatlining on the Aussie. We had the test. We had this test here in the lower end. That was holding. We had then the test, and I spoke about the 65.20. This is going to be your test. If we start to break above, then we are probably going to move higher. But we tested it and we failed, okay? And we are now back very neutral. It's RBA tomorrow. I'm really neutral on the Aussie. It could really go anywhere. The statement is going to be a guide. If they're worried about the economic situation, we're probably going to see this trade a bit lower again, in line with the rest of the dollars. If they say no, even though inflation is lower, we still keep a hiking bias, then we may be in for a retest. But it's really going to be 63.85, 65.20. I've got nothing in between to go for really, unless one has a very strong bias in the Aussie. They can have a position and then look at those extremes or of the range. If it goes beyond, we can have a bit of a break, but as long as we are inside, I'm not going to do much with those commodity currencies right now. And Kiwi is doing exactly the same. Okay, it's doing the same. Aussie Kiwi is not moving that much. We are comfortably above 108, but it's not really picking a real side either. And we are here as well, 58, 85, 90. Stretch it to 75, and the top side is 60, 10 to 60, 20. Okay, this is your range to start the week. And again, very neutral it looks. We are stabilizing here, yeah, it's just a stable market for now in the short term. Longer term, it looks like we are in both commodity currencies still in a relatively bearish scenario. But when it quiets down, those scenarios are like they get watered down as well. You know, if we start a flat line here, this is then we're going to have to look at other things. Dollar China, we had that break below 727, 726.5. Actually, pretty sharp break. The market was relatively buying the Chinese. I'm trying to handle my situation story. But then, as we can see, we're already back above. The market is still not really buying the revival story, and so if we start to get back above level 729, 730, there's a fair chance that this might start to push again. In the meantime, it looks as if it could roll over, but it's such a politically driven currency that anything can really happen right now. Okay. Like a spike up to Gavin would like a level spike up to 109.20s in Aussie Kiwi and see what happens up there. Let me have a quick look at that. I haven't been following it really live. Okay. Is this one? This one. Yep, that's a decent level. And we are slowly, possibly gravitating towards that level. That could be an RBA move. If they're a bit positive, this could be an RBA move. If in turn we start to get back below, it's 108, right? 108 is your magic level here, your pivot level. If that goes back below 108, then probably going to push down to 107. But yeah, interesting zone there, up in the 109.20s. Thanks, Gav. By the way, Gav, congratulations on the NFP guesses. You were absolutely spot on. Gavin, who is in our room, guessed 187K, or did he tell the statistics office to print 187K because that was your guess? I'm not sure. The jury is out on that one. Right. Peso. Bit of a scare there on this currency hedge development we spoke about last week. It's stabilizing as well on the dollar mix. That thing, this liquidity coming out of the Mexican peso market is or the negative bias of dollar peso or the positive bias of peso. It's going to be having an impact of anywhere between $2.5 and $4 billion of what I read. This, I reckon, can be absorbed by a market, but we can't rule out days where this currency hedge will roll off and they don't make the further rolls anymore. A little bit of a more action. It's going to be 1940 again. For the time being, we're staying below this trend line in the short term, 1720, call it, right? 1720, and in the middle there, we're looking at 1690, 91. If that breaks again, then we're probably end of this this fear spike and go back down. For the time being, I have nothing running in there. It's a bit neutral. Similar kind of picture on the Euromex. We had this. I should perhaps put an extra one in there. This prior spike. Nah, that doesn't work. No, that doesn't work at all. No, but what we had was a move back up to close to the 50% of this move here. There wasn't much technical about this this move. It was more like a bit of a fear move and get me out of there move. But fact is that we are holding below the 61.8 of the last drop here, and we are well below the medium-term trend line, which comes in around 1875. If that starts to go, then we may push again up to the 19s where we were before. But if my expectations are correct, and this scare is going to gradually go out of the market, I think we may start to range a little bit in this. But with my euro feeling and the Mexican peso still being an 11% currency, this could start to gradually, slowly, perhaps drift lower again. That is my feeling about this. And really, folks, I have not a lot more to say today. Gold is holding well. Gold is holding well. The metals are holding well. And I think that is where we have to look at where as well the market, whether they are going to buy a bit of a Chinese revival, a bit of a better economic data as well. You have yields playing in this, but you also have sentiment playing in this, okay? If China or Russia, they say like, okay, I mean, we need a bit more gold. We need to sponsor our revival a bit, and we need to have a bit more of this in reserves. This could easily go back to 1985. For the time being, I'm neutral on it. But if we start to fail here, back below 1935, confirm below 1925, then it will have a lot less positive look, this gold. Okay. For the time being, I think it's in a range. We've also confirmed the channel on silver last week. We tried to move out, but we failed. Okay, so now we are back into this channel, and we have to respect it. Yields are going to play a role, but if the economic situation is not deteriorating more, if we get soft landings, if we get a bit of a revival coming from China, if they succeed not so much to completely turn around their economic situation, because that's going to take time, but if they succeed to get some positive impulses into the market, I think this is going to hold at better levels than where it was here. This is probably going to hold somewhere in the low 23s. Yeah, 23.30, 23 is one area. I did let some of mine go on the way up, and there I'm really starting to rebuild, I think, this time around. And if you guys have nothing more to ask me today, I am going to call this a show. Start of the week, US, Canada closed. Take it easy. Look at those ranges. Look at if we break today, I'm not sure it's going to be viable, any site. If Lagarde says something this afternoon, then we may see a bit of action on the euro, dollar, euro crosses. But for the rest, I'm going to wish you a great week. Thank you for your presence as usual. Thank you for coming to the show. And we talk to each other tomorrow. Thanks, guys.